Hello and welcome back to the A-List, the FT's guest commentator series on global finance, economics and politics. So what next for the Eurozone? The perilous state of affairs in the region and the potentially huge ramifications for the rest of the world has moved the question to the top of everyone's agenda. I'm joined now from Harvard University by Larry Summers, former US Treasury Secretary and advisor to Barack Obama. So, Larry, how worried do you think we should be about the situation of the Eurozone, both for the Eurozone itself and indeed for the world economy? And what worries you most?
In democracies, fear often does the work of reason. So I think a fair amount of anxiety is constructive. The chance that without further policy actions, this will end well is, I think, very, very remote. And so a great deal is going to hinge on decisions that will be made in Europe over the next while. If history teaches anything about financial crises, it is that unmanaged defaults with cascading impacts on confidence can have consequences far beyond what anyone would imagine. It was that way with Credit Anstalt and the Depression. It was that way with LTCM, which was after all, a $4 billion hedge fund in 1998. It was that way with Lehman and the breaking of the buck and all that took place in 2008. We do know that this crisis is at the verge of reaching the stage where people stop thinking about the fundamentals and just start thinking about what the other people are going to do in terms of failing to roll over exposures or in terms of withdrawing funds. And that's always the critical point in any financial crisis.
At the moment, I suppose an extraordinary amount of focus in the Eurozone itself has been put on Greece. And Greece, in some sense, was the catalyst. It was the event that sort of made people aware how big a crisis there is. But I certainly feel now that this has long since ceased to be really the focal point of this crisis. And there are two interacting issues of enormous importance. First, the fact there is now real doubt about the ability to manage the debts of two really big countries, Spain and Italy. And second, linked with the whole story, there's this pressure on the banks and the difficulty they have of funding themselves. If you agree with that sort of perspective on the scale of it, what sort of policy action is credible? We're talking here about putting in a lot of capital somehow into the banks, using perhaps this new Eurozone facility, the European Financial Stability Fund, and there's talk about major policies to increase liquidity in government debt markets and in funding markets, and that means the European Central Bank. Is that what we should be talking about in the short term? Is that politically feasible, do you think?
Well, let me first say, Martin, that I think it's important to understand the relation to Greece to all of this. Sufficiently egregious mismanagement of the Greek situation could easily set off a tidal wave of financial problems.
Yes, I agree with that.
In that sense, Greece is essential to this crisis. But if, as I said at the IMF meetings, if someone came from Mars and paid off all of Greece's debt, and so Greece no longer had a debt problem, and whoever did that returned to Mars and it was sure they weren't going to come back, I believe that the respite that would be obtained in markets would not last a full week, because the more profound concerns, as you wisely suggested, go to European banks and go to the fact that two stress tests have not fully satisfactorily established confidence in them, and go to the questions around Spanish and Italian debts. With respect to the financial institutions, it has to start with an effort to establish credibility. In the United States, frankly, when we did careful, rigorous stress tests with a great deal of transparency, they actually proved to be quite reassuring, because what people learned was that things were better than they had feared. It is possible that that will happen in Europe. It's not something I would confidently expect, but a sense of an honest dimensioning of the problem and a sense that policymakers are acting with an honest dimensioning of the problem is, I think, a prerequisite to success. My guess is that will mean significant capital infusions into a significant number of institutions. But what surely will not pass muster at this late date is stress tests, so-called stress tests that are a walk on the beach rather than stress, and that assume that all sovereign debts are 100% good in the face of clear evidence that that's not the market's judgment. I think there is, in all likelihood, a substantial liquidity confidence element in the debt problems of Spain and Italy.
I think that's
much
right.
as in Mexico in 1994, when the crisis passed from the fundamental stage, if you like, to the hydraulic stage, where investors were concerned not so much with whether the country could ultimately pay its debts, but whether others were going to withdraw and leave them holding the bag. That's when there's a case for strong action of a broad kind that Bagehot described when he famously wrote about lenders of last resort.
So my view would be in this situation, essentially looking at the European scene, that must mean the European Central Bank. There is no other agency capable of providing this sort of funds to these sovereigns. I tend to agree with you. If they've got enough support, with some luck and some growth in the Eurozone, they should be able to get through it. But of course, there is a very strong view in Germany in particular that providing this sort of lender of last resort facility on a large scale in the debt markets of sovereigns is absolute evil, wickedness. It's the beginning of hyperinflation in the end. So in that sort of political context, do you think that the ECB is likely to be able to do this, particularly headed with by an Italian? It's going to be a pretty tricky political situation at the very least. And in that context, will investors believe that the ECB will do it on the requisite scale to make a difference? That seems to me the really big question now.
I think those are important questions, and no one can know the answers with certainty, Martin. It does seem to me that there's a distinction to be drawn between central banks providing liquidity to avert crises and central banks providing direct financing to profligate governments. And so I wonder whether there aren't ways of establishing structures, perhaps new facilities that would enable the ECB to be in the position of providing liquidity at a moment when there obviously isn't need for the infusion of liquidity and confidence, but in a less overt and direct circumstance, taking on a direct role in financing governments. And my guess is that there'll be reflections on those kinds of questions going forward.
Well, that's clearly where we have to go. They must have those facilities in the future. And fortunately, and I think we probably agree with this, the nature of the Eurozone is such that by the time they've established the facilities, this crisis may be over, and not in a good way. But thank you very, very much indeed for sharing your thoughts on this now increasingly worrying crisis. And there are, of course, many further comments on this and other topics on the A-list on ft.com.